Hello guys, glad to have you on board again today. I'm sorry for the little delay to upload those videos today. I had to take care of some emergencies this morning, but anyway, I'm going to take a few minutes to review the market pretty quickly again today. I might not be able to take the question section today, so if you had interesting questions you wanted to have an answer to, I strongly recommend you guys to either post them again below today's video, or just remind me to cover up today's question as well tomorrow. Anyway, we're just gonna get it started as usual. Not that new regarding the Bitcoin. Yesterday the Bitcoin has been breaking both the high and the lows of the day and closing right in the middle, suggesting the market's just lost out of that support area. We're kind of handling support out there, doesn't really know what the outcome will be. Alright, sorry. So, until we manage to find some kind of direction out there, it's pretty much kind of a big range mode. We're contracting, making lower highs and higher lows, and the momentum is just oscillating from overbought to oversold, from overbought to oversold. So, there is absolutely not a clue about what's going to happen. I mean, in a technical perspective, the market is waiting to have some kind of catalyst that will tell him whether it should go higher or lower, and at some point that market catalyst seems not to come. So unless you have some information that I don't, which I don't think is the case, or otherwise just trade that information because the market is waiting for it. But if you're just there trying to watch out for the news flow, trying to figure out what really is going to drive that market higher or lower, you might just get it wrong. I mean, at some point right here, I think just algorithms will be there to trigger that thing, and it's just a matter of time. And I expect from some either two options: whether the market will find that catalyst and will push it brutally higher or lower. And basically at that stage and at that point, it's a 50-50% guess, which means it's nothing I get interested about. I'd rather like not to trade than taking a 50-50 trade. 50-50 is just going to casino and playing either black or red at a roulette, and is nothing like I care about. I'd rather like to go to the roulette instead of putting some money in the market. So if you like playing roulette, I'm okay with you trading and guessing what the next move will be, but be aware that there's nothing you should be excited about. It's just going to be a damn 50-50 guess. So, where things seems to be different to me is on the Ethereum, in which I think we've got slightly better odds to find a bullish reactivation, as the market has been reaching out to very interesting prices. But the problem out there is the one we've been stating yesterday already, is the fact that this market is just failing day after day to manage finding a bottom out there. So we need to find a support, either by creating a momentum signal, which we don't so far, or creating some kind of candlestick pattern, which means until we manage to at least break a previous day's high, or triggering some kind of momentum pattern, there is nothing you can trade, instead of just waiting for the bottom to be found out. We had a breakout trade to trigger in here, which was the previous bottom out down here. We had to go lower than that. Now that this is done, we were supposed to find buyers, which we don't. So there is a problem. We're supposed to find buyers, but the buyers aren't showing up. We've got volume suggesting the prices are getting interesting, gathering interest from the indicator, from the traders community. We can clearly see this. Look at this. The volume is just narrowing in here. It's just getting literally nothing. Like the prices don't interest anyone. Then we've got a pickup in volume and prices moving downward. It isn't sign of a bearish market. It is sign of a market that caught interest from traders, yet speculators and short-term speculators trading bearish might get the advantage now, but doesn't necessarily mean that they will forever. And I'll need to be clear on this: when you've got short-term traders fighting long-term buyers, every time the long-term buyers get to win. It's just a matter of time and a matter of price. So I have no regret, once again, trading the Ethereum with the bullish side. It's just that right now, I think the bottom is still waiting to come. And regarding this, I still have available cash amounts to buy that eventual bottom when it will come up. But until it shows up, I just can't speculate anymore, which means it's not interesting to just cover that market each and every day to tell you the same thing. It's just a wait and see kind of approach in here. Sine wave suggesting we might be ready to buy, that the sellers should be exiting, but for now they keep on pushing to down prices, and we're still not finding bullish support from the long-term buyers. At least they're not strong enough to hold the bearish volume at short term. And whenever that mechanism will reverse, whenever we'll find that bottom, the short-term speculators will get to buy. They're just following what's happening in the shorter time frames. And whenever we'll get to buy, they will buy as well, which means we'll have only buyers, either long-term and short-term buyers, which means we've got all the entire trading panel going bullish in the same time, which suggests we might have a V-bottom structure. And as I said, I think the latest resistance in a daily chart is $300. And we could just go there in a couple of days, or even a single day might not necessarily be that big of a deal. So I'm just waiting for this at the current time, and as long as we don't have it, we just don't know that the buyers have been taking over. So that's all I had to say regarding cryptocurrencies. I'm basically moving to other asset classes right now, trying to figure out what's happening with the gold and silver couple. They're still trying to figure out a support area, even though I think this is clearly a bullish wave. We've been breaking out of that bearish trend channel, and I think right now we're just trying to figure out a support area, trying to stabilize. We've been retracing nearly 50% of the bullish impulse. We could just go to 61% or even 76.4. Wouldn't necessarily be that big of a deal, because generally in wave 2 cases, we generally retrace 61 to 76.4. So if we do just 50, means the bulls are really in control, and I'll be glad to trade the resistance breakouts. But for now, it isn't showing any signs of strength like that. We've got the lower shadow candle yesterday. We'll see how the market reacts to that. Either it will break today and handle a candle close at the high, and tomorrow we'll push on further higher. Option number 2, we make an upper shadow candle, and tomorrow we're just probably going to keep on retracing to lower values, probably nearly 61 to 76.4% retracement. But anyway, I think that market remains bullish. I'm just looking out for the I should be having a number out there. So this is a bullish asset to me, at least that's the choice I've been making. And I think right now we are probably just 225, okay, which means speculating. Can be trading that market without problems, but still way too early to consider reinforcements, and even way too early to consider leveraging that market. So it's just patiently waiting to see some confirmations that you're trading among others and not against them. Same thing goes for silver, and that's pretty much it. Regarding US oil, I'm basically waiting to find a bearish signal in the next following days. I didn't want to trade tomorrow simply because this was way too much of a bullish market. So this is nothing I wanted to trade. We basically highlighted a bearish opportunity in that sector, and as you can see, the market just went all the way through this. So this is nothing like I want to trade. I'm basically waiting to find another bearish signal. If you want to find some kind of ID in here, you just take the usual retracements, and basically this is where we should try to find some interesting selling prices. I just took my first speculative trade out there, totally just paying for the prices. So I just got to pay in here right now. Really low leverage. I'm just tipping a toe inside the bath just to taste the temperature. I'll be waiting, of course, for a signal. If I do get a signal, I'll get to put some more money out there. It's just basically I've been stepping in with a few contracts. It's just being in here and wait to see. Okay, just because we've got interesting prices, so I'm paying for the prices and wait to see if we got signals in the next following days. We're right in the red areas. Obviously, for that tiny speculative trade, the stop loss is right above that market top. And just to set things really straight, this is costing me 0.3% capital loss if the market goes up here. So it's just really tipping a toe to taste temperature, nothing close to this. And obviously this is far from being into the strategy application. I'm just paying an interesting price out there and nothing more than that. Forex market. So tomorrow will be the big day. We're gonna have the ECB, so we're gonna have to zoom out in there, trying to figure out what's at play regarding the euro-dollar market. So eventually even going there, because I think what's going to be at play tomorrow is will be September meeting from the ECB. It's going to be a big game changer, because from September we've been switching to $15 billion of QE before stepping out entirely to $0 per month in December. So obviously all the journalists and all the questions surrounding Mario Draghi will be around how we plan to exit QE. Is it still going to be planned for an additional TLTRO or things like that, or anything that could be suggested to be a potential easing for the market if things get dirty, because now the market is fearing for dirt and dirty things to happen whenever all the central banks will just pull out. This is the biggest risk for Wall Street. Basically, now that we've paid very high pricings for corporate profitability, and that we see that those profits might be topping up, we want to have some kind of guarantees that the central bankers will be there to help if we get to have problems again. So this is what the Wall Street guys are trying to figure out. They've been putting a lot of money in there, and they just want to know how risky that money is. Are we about to face another recession, or is the central bankers still at play of that game and never going to let the market go down forever? This is what Wall Street would like to see, but the central bankers doesn't have an unlimited amount of funds. They must respect rules, and at some point, this beautiful game, which is kind of a cheating game, it really is a poker face kind of approach in here. It's just Wall Street would like to have things that obviously the central bankers won't be able to provide forever, and even though Wall Street would like to have them forever. So it's dangerous. We know about that. This is why I've been trading bearish on the US equities for a little while. But this is also why I'm not doing this with a lot of conviction, neither leverage, because there are still high risks that just Wall Street's going to go, okay, they're going to be there, and then we're just going to keep on pushing higher as long as the profits are there. And whenever the profits won't be there, because you cannot make profits forever, the economy is really like a human being. It's breathing out and breathing in and breathing out. So at some point, something is going to narrow the buying potential of living beings that are buying stuff and things like that. And at some point, we're going to buy fewer stuff. And whenever this will happen, obviously profitability of corporates will go down, which means investment will have to pull out the money they've been paying for future profits that will not come. This is what we call a damn fucking recession. This is how it goes. It cannot go up forever. We cannot have a permanent growth. Growth comes from recession, and recession comes because of growth. This is how it goes. And thinking it in a single polarity isn't going to work ever. This is because this is a duality that this makes that market functional. This is a cycle, and thinking that we can just go up without ever going down is as stupid as thinking that you can just breathe in without ever breathing out. So, doesn't necessarily mean we're going to breathe out tomorrow, just that we have a speculative timing that suggests it is rewarding enough to trade in that potential, in that eventuality, at lower risks, at fewer risks. This is all I care about. I mean, eventually I could lose 5 to 6% or 5 to 10% capital on that trade, and I'll just be wrong, and Wall Street would just add an additional 15 to 20% upward move, which is very much probable as well. It can happen, but I'm just losing a 10% trade out there, which is a great loss, a big loss, a significant loss. Let's call it that way. But if it goes the opposite side, if it goes down, I'm probably going to take a 50 to 100% reward on that trade, which means I go there without questioning if I do have the signals to do it. I don't want to trade what I think. I want to trade what I think if it corroborates what I see, which is so far the case. I see things that suggest the market should go down. I think the market should go down, even though the market do what it wants. And you have to be assessing that. It's not because you think something and that you see early signals of that thing to probably happen that it is necessarily going to be the case. This is why you're not going to risk ever, you're never ever going to risk more than 10% of your capital out there. And this is even the maximum I'm ready to give away. And this is a significant loss. I'm generally not risking more than 3% capital on trades. Even though in here it is trades, it is multiple trade scenario. I'm trading multiple indices, I'm trading accordingly the yen and things like that. It means that if I'm just wrong on that scenario of Wall Street breathing out, I'll just get to take losses on the yen scenario, probably the gold as well, probably the US indices, which means I'm probably going to have to give away a 10% loss. But I'm ready to face that. But if I'm going right on the opposite, EURJPY is going to provide fucking huge gains. Same things goes for USD-JPY, NZD-JPY. USD-CNH is going to collapse. USD-MXN as well. So I'm going to make huge gains if this triggers, which means risking 10% for this is nothing compared to the potential gain. And as I have signals, I do trade. So anyway, I hope you understand that, because we've been talking about that for a month now, as I'm trying to help you assessing how traders might be thinking in a day-to-day basis. And I just want you to make sure, that you guys really get the point out there. It's not that I want to be true, it's just that I don't fear being wrong. And this is something that most guys would just think I'm crazy. I'm not, I'm just a trader. I'm speculating and I know this is what I'm doing. It's my job. My job is not to be right or wrong, it's just to try finding interesting prices to trade. And I think right now we do have those prices. So euro-dollar in a long-term perspective, to me, is in a long-term buying area. We've been making probably what is about to be a first wave of a consolidation in some kind of ABC big range. And I think in the end we're probably going to have to get to those that price area, which is nearly 140 for a dollar. A euro gets $140. This is what I care. If we go there, fucking huge profit to make. So obviously I want to be in and I want to buy euro-dollar. The question is just, what is the good timing to do this? And I think right now might be a timing and tomorrow might be a game changer. So in a day-to-day basis, in a daily basis, tomorrow's market catalyst, I think, has the potential to make moving a weekly chart scenario. So option number one, the market decides it's already time to go and we're rapidly going to get out of the blue area and forecasting resistances to be tested one by one. The market obviously is going to follow follow cycles. We're early trending, which means we're going to breathe in, breathe out, breathe in, breathe out, breathe in, breathe out until we manage to break that high. So in that area, we're going to have pullbacks. So you don't want to just get in fully leveraged and things like that. We're going to have to manage the risk on the way up in here. So option number one, we break that resistance. The next one clearly is there, which I think if we do this, we're going to trigger a swing trade that is going to lead us to that price area, back to 120. It's far away from the current prices, which leads me to believe that we could have some downward volatility tomorrow. It wouldn't necessarily be a problem if we were just to go there, to go to 114, which is a price I'll be really interested to buy if we had to go there. So I would like to have interesting prices on the euro-dollar tomorrow. That will first give me some room for the euro-yen to retrace and go lower. And secondly, if we trigger another downtrend just for a week or two, heading downward, getting to those prices, 114 or below, we could probably have very fucking interesting prices on the euro-dollar to just get to buy that long-term scenario, which is a weekly scenario. So if you do buy this one, and if you do want to target 1.4T, really be aware that it's going to take months and years to get there. So if you want to play that trade, it's a buy and hold. So it's something you don't want to put more than 5% risk out of, which means you cannot put leverage, and you have to be really patient. And you just don't want to have a look at the 2-hour charts afterwards. If you do take that trade, you take it, you spare it in your mind, you put it in some place in which you don't have a look at that trade until it provided the gains, which means unless we find a way up to 120 or even 1.25, there's nothing you should manage upon that trade instead of just waiting to see if it works or not. Okay? So euro dollar is going to be a big game changer tomorrow. GBP/USD is still trying to figure out a way out there, but I think we're probably going to have some consolidation to come in here. Just as we say, I think euro dollar is going to retrace, GBP dollar is going to retrace as well. But more likely because of the euro currencies, the euro area currencies, instead of the dollar. I don't think the dollar is going to be the game changer, which leads me to believe that the dollar CNH is not going to move that much, neither the dollar MXN. It's not about dollar, it's about euro area currencies. So CHF, euro, and GBP are going to be impacted, I think. So of course a big game changer still until tomorrow is I think the EURJPY, which I expect to just break down and get to lower valuations again, and I hope that we're gonna have to fuck up that support. So I'd like to see risks showing up and euro retracing, and then we'll have a bearish euro with a bullish yen, and if we do have that, we could have another trending move. Let's say a couple weeks tops. It doesn't require more than that. You see, when the euro yen is trending, it can make fucking bearish moves in just 5 days. So in a week or two, we could just be right to the targets, and this is what I would like to see. A euro yen just collapsing, and whenever we get there, I buy euro dollar, I sell dollar yen, and we keep on going and riding that trend. Bullish on yen, but bearish on dollar instead of euro, and bullish on euro dollar. Okay, it's just switching asset classes and price and money affectation. I don't know if that works, if that word really exists. Let's say the way I do spread my money inside the market will change in the next following weeks, going out of buying dollar into selling dollar and getting into buying euro instead, but keep on pushing further on buying yen as well. Okay, so regarding the forex market, to me, it's still, I think, weak NZD versus, and mostly versus yen and AUD. This is the reason why I think I'm buying AUDNZD and selling NZD yen as well. I think the dollar will be weakened and the yuan will be strong. So weak dollar, great yen. I think USD yen is going to be a great performer in the next following weeks and months. Euro yen is not going to be that much of an interesting trade, which I think euro has been performing to the downside enough and is not going to be profitable enough anymore. And I think we're going to have bullish euro, bullish GBP, which means GBP USD will be strong as well, with a weak dollar and strong GBP. Same thing goes for euro dollar. So I will be buying those two, not trading this one anymore. And whenever I get to the targets, get to reinforce this one and this one, get to trade and validate this one, and get to trade this one bullish, I think. This is what I have in mind for the next following weeks and months. I'm not taking care about the stock market. It's just fucking oscillating. It's just the market's trying to figure out things out there and trying to see what we can buy in short-term scenario, what we can sell, buy, sell. So it's just money is moving, which suggests investors are interested by those prices, which is not a good news, because when we've been rising pretty brutally, when we're making historical highs, and investors are interested by prices, means generally that they're trying to sell what they bought at lower prices earlier. So we still, and I stand on this, are trading both a dangerous timing area ahead, as October is generally a bearish seasonality. So we'll still have a few weeks of potential bullishness that more likely sounds like a range after having a pretty bullish summer. So we are ahead of a dangerous timing. We've got lots of things to happen. Either ECB winding down, we've got Trump bullshitting each and every day, we've got the US economy showing some not good signals. I mean, just look at this. Tomorrow, we've got price production getting negative. I mean, it's not that big of a deal, but this is not normal. If the economy is producing a 4% annual as GDP, we shouldn't have price production narrowing to negative values. We shouldn't have that. So everything suggests this is not normal what we've had. Wall Street has just been seeing and focusing on what was good and avoiding what was bad. How long is this going to work out is the question out there. It can work out. It also cannot. And if it cannot work, then it means we'll have to reprice a lot of things, and this will probably be done to a bearish repricing, and that repricing, we're probably going to have to suffer massive drops on assets and increasing the volatility. But it's just a matter of time, and for now, we do have signals, but the market doesn't want to follow them. Let's just try to figure out what's at play. So we're watching for potential trades. It's not going that great today. It's just the market's trying to oscillate. So we're trying to figure out whenever we'll have a bearish signal out there. VIX remains low, the junk bonds remaining between. We'll still have a repo market stabilizing around 2%, which means it's acceptable at 2%. It's whenever we'll have we'll eventually have the next rate hike that will get above to 2% long term. For a long, I mean, we're not going to retrace afterwards. Whenever we'll have to consider getting to 2.25, for example, if we raise a quarter, 25 basis point again. If we do this, 2.25, I think, is going to be really expensive for short-term liquidity buying and borrowing. So it's going to change the game. And I think right now we're just right on the razor's edge. Doesn't really know how long this can take, if the Fed's going to rise rates again or not. It's the question right now. Okay, and I think Wall Street is oscillating at that point, waiting for a market catalyst, pretty much knowing what the Fed will do, knowing that the Fed will obviously have a look at what the ECB will do as well, which is why tomorrow is going to be a big day, and we'll have traders taking position today and tomorrow ahead of that event. So I'm watching closely for Wall Street latest 15 to 20 minutes to 30 minutes today in order to eventually take a trade entry. Probably bearish on the equities. If I see signs of trading activity doing the same, if I see no signs of bears at play, I just do nothing and wait for tomorrow. All right. So this is basically waiting for this today. I'm going to show how I'm going to watch closely how the VIX is going to close today, as it is suggesting that we should keep on going to the downside for a few days again. So we'll see how it goes. But if for some reasons today we made some kind of a very nice bullish candle on VIX, I would consider this interesting, okay? Because we're on a trend line. Clearly everyone has been seeing this. We're trading that trend line. I want to see how this goes. If for some reasons the VIX were to make a very brutal candle today, I don't want to see a tiny candle like that. But if the VIX was about to go there once again and eventually break the damn resistance, this is where things could turn nasty. Okay, I expect the market to eventually forecast a more likely bearish breakout of that triangle. But if for some reasons we were to make a bullish breakout instead, this is where things could just shake out pretty brutally, because we have a double bearish in here on volatility. And remember that, I'm just buying volatility. I'm not looking out for selling it, but a double bearish signal is also a bullish entry signal, which means whenever you want to buy, you can either buy a double bullish signal, but you can also buy the breakout of a double bearish. So if we go there and manage to validate that breakout in here, you can be damn sure I'll be buying volatility eyes closed. Okay, I think very less probability to see that happening, but as long as I haven't been proven wrong, I'm just watching for that opportunity if it shows up. But right now, it's more likely waiting rather than taking aggressive entries and things like that. So maybe a speculative entry tomorrow or later today to eventually try to taste the market and see how it reacts ahead of tomorrow's ECB's meeting and the CPI core information that will be released pretty much in the same time scale. So we'll see about that tomorrow. I'm not taking questions today, so once again, if you want me to answer a question you've already been asking me, either you repost it tomorrow or in today's video's comment section, and I'll answer that tomorrow, or you just remind me to take care of today's questions as well tomorrow. Bye guys, and see you tomorrow.